But you have to learn what these markets do through price delivery. And if you do that, you remove impulsiveness. What is impulsiveness? You're watching price. You're among some chattering community of people on a Telegram or a Discord or whatnot. And you're simply waiting for something to happen in price, and it starts running higher. What's everyone going to do? Oh, I'm buying. Oh, it's going up. Everybody will find their voice then and say, it's going higher. Of course it is. It's going off 30 handles. It's running. And then you feel like, I got to get on. I got to get on that. And what do? Buy it. Buy it. I got to buy it right now. Because it might keep going up to where? I don't fucking know, but it's going to go up because look what it's doing right now. That's impulsiveness. And some of you are fucking laughing right now and smiling, thinking, shaking your head. This motherfucker just pegged me again. Yes, we've all been there. I've been there. But the only way you combat that and you keep it at bay and you conquer it is to learn about price delivery. That means you're not even back testing. You're just studying what price is likely to do most times. In certain instances, in certain circumstances, the market will create market reversals. It'll create continuations. It'll create range-bound opportunities. But your impulsiveness is conquered by the study of general price action and understanding what's available in terms of how markets move. What's the benefit of that? Knowing what to do for yourself as a trader in terms of pursuing certain aspects of trading. Some of you can't do well in a trending market. Like it completely does you in. Like you would love to be in a range-bound environment. You like that kind of thing. Okay, that's a strength for you when you identify that. Then you can go in and zone in to that type of condition in the marketplace. Every time frame, every single day has that occurring. You're going to find that somewhere in every trading day on any one given market, you go down low enough in a time frame, you'll see that very characteristic in price. And you can use that to trade. That's what I mean by understanding and having a general knowledge of how price is delivered. It moves from consolidations to expansions to reversals. Knowing that ebb and flow, how it does it, and then applying it from a higher time frame, monthly, weekly, daily, 4 hour, 1 hour, 15, or whatever time frame you want to use. You navigate with that price delivery continuum from higher time frame to lower time frame. And even if a move has already started on the daily chart and it's ran several hundred handles or whatever on a big day, you know that you're not going to be impulsive the next morning. I got to go in there and chase that. It's going to keep going down, which is the first rule I told you. On a large range day, what do? Lower our expectations on the morning session. That doesn't mean that the market can't run. It doesn't mean that you can't take a trade. It just means that you, as a developing student, you as a new trader in the making, you're not there yet. Don't have a hard opinion immediately the next morning after a large range day. Wait, that's amateur hour.